The options market does not forgive the unprepared. Leverage moves fast. Volatility expands. Premium decays. Expiration approaches. Assignment risk waits in silence. And if you enter this battlefield without preparation, the contract will teach the lesson for you. Not gently, not slowly, and not on your schedule. This is the options battlefield. Prepare before prediction. Review before repeat. Prepare before action. Segment 1. The field opens. The options battlefield does not begin with a ticker. It begins with a contract. A stock position asks one primary question: where can price go? An options position asks more. Where can price go? How fast can it move? How long do you have? How much volatility is priced in? How much premium are you paying? How much can decay before your thesis has time to work? This is why the options battlefield is different. In stocks, a trader may be wrong on timing and still have time to recover. In options, timing is not a detail. Timing is part of the weapon. Every contract carries an expiration date. Every contract carries premium. Every contract carries sensitivity to movement, volatility, and time. And every contract forces the market warrior to respect something many traders ignore. The battlefield is not only price, the battlefield is structure. Options can magnify opportunity, but they can also magnify mistakes. A small move in the underlying stock can create a large change in the option. A delay can weaken a position. A volatility shift can change the value of a contract even when price appears to move in the expected direction. A trader can be right about direction and still lose because time, volatility, or strike selection worked against them. That is the first lesson of the options battlefield. Being right is not enough. You must be right enough, fast enough, structured enough, and disciplined enough. The unprepared trader sees options as leverage. The market warrior sees options as responsibility. Because leverage does not forgive confusion. Leverage does not reward emotion. Leverage does not wait while the trader learns the rules in the middle of battle. Before the market warrior enters the options battlefield, the field must be read. What is the market environment? Is volatility expanding or contracting? Are earnings approaching? Is the stock moving cleanly or violently? Is the broader market supporting the idea or fighting it? Is the contract liquid? Is the spread wide? Is the expiration too close? Is the position size controlled? These questions are not optional. They are the map. On the options battlefield, the Greeks are not decorations. They are pressure points. Delta measures directional exposure. Gamma shows how quickly that exposure can change. Theta reminds the trader that time is constantly moving. Vega reveals sensitivity to volatility. Together, they form a battlefield map of forces that are always active. Even when the trader is waiting, even when the screen is quiet, even when price appears calm. The contract is still changing. This is why options require preparation before participation. A market warrior does not enter because a premium looks cheap. A market warrior does not enter because a contract feels exciting. A market warrior does not enter because a move already started and fear of missing out takes command. The market warrior asks a different question. Does this structure deserve risk? That question changes everything. It moves the trader away from impulse. It moves the trader away from guessing. It moves the trader toward preparation. The options battlefield includes calls and puts, singles and spreads, buying premium and selling premium, defined risk and undefined risk, short-term contracts and longer-dated contracts, directional trades and probability-based structures. But none of those tools matter if the trader does not understand the terrain. A call option is not automatically bullish wisdom. A put option is not automatically protection. A spread is not automatically safe. A low-cost contract is not automatically low risk. And a high-probability setup is not automatically a good decision. In options, every structure has a trade-off. More leverage may mean less time. More time may mean higher premium. More probability may mean limited reward. More reward may mean lower probability. More complexity may hide risk the trader does not understand. This is the field. This is the terrain. This is the reason preparation must come first. The options battlefield is not designed for the trader who wants excitement. It is designed for the market warrior who can slow the mind, study the structure, define the risk, and decide whether the contract deserves command. Before prediction comes preparation. Before leverage comes education. Before entry comes risk definition. The field is open. The contracts are waiting. Volatility is moving. Time is passing. And now the next question appears. What happens when the trader enters unprepared? Review before repeat. Prepare before action. Segment 2. The cost of entering unprepared. The unprepared trader often enters the options battlefield with confidence. Not because the plan is strong, because the premium looks small. A contract appears affordable, the risk appears limited, the potential reward appears large, and the mind begins to whisper the most dangerous phrase in options trading. It is only a small amount. But small premium does not always mean small risk. Small premium can mean little time, poor probability, bad liquidity, weak structure, a wide spread, a contract that must move quickly just to survive. This is the first cost of entering unprepared. The trader confuses cheap with controlled. A cheap option can expire worthless. A cheap option can lose value even when the stock moves. A cheap option can decay while the trader waits. A cheap option can trap the unprepared trader inside hope. The market warrior does not ask only, how much does it cost? The market warrior asks, what must happen for this structure to work? That question exposes the battlefield. The second danger is time decay. Theta does not shout. Theta does not threaten. Theta does not announce itself like a market crash. Theta works quietly, hour by hour, day by day, expiration by expiration. The unprepared trader buys a contract and waits for the move. But while the trader waits, time is already attacking the position. If price does not move fast enough, premium begins to bleed. If volatility contracts, premium may weaken. If the move comes late, the contract may not respond the way the trader expected. In options, waiting is not neutral. Waiting has a cost. That is why the market warrior treats time as a battlefield force, not as a background detail. The third danger is volatility. Many traders enter options because they expect movement, but they ignore what the contract already priced in. Before earnings, before major announcements, before emotional market events. Premium can rise because uncertainty is high. The trader buys the excitement. Then the event passes. Volatility contracts, and the option loses value even if the underlying stock does not collapse. This is one of the most painful lessons in the options battlefield. A trader can be directionally correct and still lose. Correct direction does not guarantee correct structure. Correct thesis does not guarantee correct timing. Correct opinion does not guarantee correct premium. The contract obeys its structure, not the trader's confidence. The fourth danger is leverage without command. Options give the trader access to powerful exposure, but exposure without discipline becomes a weapon turned inward. The unprepared trader sees leverage as opportunity. The market warrior sees leverage as force that must be governed. One contract can move quickly. Multiple contracts can move faster. A position that looked small at entry can become emotionally large when the premium starts collapsing. Then the trader begins to react, checking the position constantly, moving stops, adding more, rolling without a plan, averaging down because the original idea feels unfinished. At that moment, the trader is no longer commanding the position. The position is commanding the trader. The fifth danger is expiration pressure. Expiration creates urgency. Urgency creates emotion. Emotion creates mistakes. As expiration approaches, every decision becomes sharper. There is less time to be wrong, less time to recover, less time for the thesis to develop. A trader who enters without preparation may discover too late that the battlefield has narrowed. The clock is no longer a tool. The clock has become an enemy. The sixth danger is complexity. Options can be simple, but they can also become dangerously complex. Calls, puts, spreads, straddles, strangles, calendars, diagonals, iron condors, covered calls, poor man's covered calls, cash-secured puts, credit spreads, debit spreads. The names can make the trader feel educated, but naming a structure is not the same as understanding its risk. A market warrior does not use a structure because it sounds advanced. A market warrior uses a structure only when the risk, reward, timing, probability, and exit conditions are understood before entry. The seventh danger is emotional rescue. The trader enters without a plan. The position moves against them. Then the trader tries to rescue it. Roll it, double it, extend it, convert it, defend it, explain it. But a rescue made from emotion is not strategy. It is surrender wearing armor. The options battlefield punishes that. Because every adjustment changes the risk. Every roll changes the structure. Every added contract increases responsibility. And every decision made under pressure reveals whether the trader had command before the battle began. This is why preparation is not optional. It is protection. The unprepared trader asks, "How much can I make?" The market warrior asks, "What can go wrong?" The unprepared trader asks, "How fast can this move?" The market warrior asks, "What happens if it does not move fast enough?" The unprepared trader asks, "Can I afford the premium?" The market warrior asks, "Does this contract deserve risk?" That is the difference. Not intelligence, not courage, not prediction. Command. The options battlefield will always offer temptation. Cheap contracts, big percentage moves, fast profits, explosive charts, exciting stories. But the market warrior does not come to the battlefield for excitement. The market warrior comes prepared. Because leverage must be earned, time must be respected, volatility must be understood, risk must be defined, and emotion must remain under command. Now the cost has been revealed. The next step is preparation. Review before repeat. Prepare before action. Segment 3. The market warrior prepares. Now the cost has been revealed. The next step is preparation. The market warrior does not enter the options battlefield because a contract looks exciting. The market warrior enters only after the structure has been studied. Before the contract is selected, the battlefield must be read. What is the broader market doing? Are the major indexes supporting the move or resisting it? Is volatility expanding, contracting, or already elevated? Are earnings approaching? Is the stock moving with discipline or with disorder? Is the sector showing strength, weakness, rotation, or exhaustion? The market warrior does not begin with the option chain. The market warrior begins with the field. Because every option contract lives inside a larger battlefield. A call option does not exist alone. A put option does not exist alone. A spread does not exist alone. Each structure is affected by the market environment, the underlying stock, volatility, time, liquidity, and the trader's own emotional discipline. This is why preparation begins before entry. First, the market warrior studies direction. Is there a clear thesis? Is the move supported by price action? Is the trend strong, weak, extended, or uncertain? Is the trader reacting to a headline or observing a structure? Second, the market warrior studies time. How much time does the contract need? Is the expiration too close? Is the position depending on an immediate move? What happens if the move takes longer than expected? In the options battlefield, time is never neutral. Time is either helping the structure, limiting the structure, or attacking the structure. Third, the market warrior studies volatility. Is premium elevated? Is implied volatility high because an event is approaching? Could volatility contract after the event? Is the trader paying too much for uncertainty? The market warrior does not buy excitement without measuring its price. Fourth, the market warrior studies liquidity. Is the option actively traded? Is the bid-ask spread tight or wide? Can the position be entered and exited cleanly? Is open interest sufficient? Is volume present? A contract that looks attractive on paper can become dangerous if the exit is weak. Fifth, the market warrior studies the Greeks. Delta asks how much directional exposure is being taken. Gamma asks how quickly that exposure can change. Theta asks how much time is being lost. Vega asks how much volatility can affect the position. The Greeks are not there to impress the trader. They are there to warn the trader. They reveal the pressure inside the contract. Sixth, the market warrior defines risk before entry, not after entry. Not when the position moves against them. Not when emotion begins to rise. Before entry. What is the maximum loss? What is the intended exit? What invalidates the thesis? Where does the structure fail? How much capital is at risk? Is the position size small enough to allow clear thinking? The market warrior knows this before the order is placed. Because once the position is live, emotion begins to speak. Preparation must speak first. The unprepared trader uses options to chase. The market warrior uses options only when the structure deserves risk. That is the difference. Options are not a shortcut around discipline. They are a test of discipline. Every contract asks the trader to answer the same question. Do you understand what you are controlling? If the answer is no, the market warrior stands aside. Standing aside is not weakness. Standing aside is command. Cash is a position when the battlefield is unclear. Patience is a weapon when leverage is dangerous. And discipline is protection when the contract is tempting. Before the next options trade, the market warrior prepares with a checklist. 1. Define the market environment. 2. Identify the underlying stock or asset. 3. Confirm the thesis. 4. Review earnings, news, and event risk. 5. Study volatility. 6. Choose the structure only after the battlefield is understood. 7. Check expiration, strike selection, liquidity, volume, open interest, and bid-ask spread. 8. Review delta, gamma, theta, and vega. 9. Define maximum risk. 10. Know the exit before entry. This is not hesitation. This is command. This is how the market warrior prepares. For further independent study, the War Council may also point the market warrior toward public options education resources, such as Henry of Invest with Henry. This reference is provided for neutral educational awareness only. It is not an endorsement. It is not an affiliation. It is not a sponsorship. It is not a performance claim, and it is not a recommendation to buy any product, service, course, alert, or strategy. The market warrior does not outsource command. The market warrior studies, compares, verifies, and takes responsibility before risk is placed. And preparation begins with intelligence. Market intelligence is the gate to the war room. Market intelligence shows the pressure. The war room organizes the field. There, the market warrior reviews market conditions, economic events, sector movement, volatility, technical pressure, and the battlefield before action is considered. The war room is not a place to chase trades. It is a place to slow the mind, to challenge impulse, to expose risk, to decide whether the next move deserves action. And sometimes the answer is no. No trade, no contract, no leverage, no unnecessary risk. That answer can protect the trader from the battlefield more than any winning idea. Because the goal is not to trade every opportunity, the goal is to preserve command. The options battlefield will always offer temptation. Fast movement, low-priced contracts, explosive setups, earnings speculation, Volatility events, stories that feel urgent. But urgency is not strategy. Excitement is not preparation. And leverage is not wisdom. The market warrior does not enter to prove courage. The market warrior enters only when risk is defined, structure is understood, and discipline remains in command. This is the options battlefield. Study the field, respect the contract, measure the risk, protect your capital. Begin with market intelligence. Enter the war room, and before your next move, prepare before prediction. SunZuTrading.com. Preparation before prediction. Enter the war room before your next move.